G'day, my name is Matt Grimwood and this is our first home buyer's guide produced by Heritage Media. Now, one of the most confusing steps of buying your first home is finance. There's deposits you've got to save, there's different fees that you've got to pay, and there's home loans that you've got to commit to. Now, our guest today has had heaps of experience doing this and is happy to share all of her knowledge with us from her experience in the real estate industry. Joining me today is Kimberley Burke. Kim is an award-winning real estate agent, and her team has just recently been named top 5 in sales by REB's Women in Real Estate. Thank you for joining me, Kim.
Thank you for having me.
No worries. So could you give us a bit of a rundown as to where your journey in real estate began?
My journey in real estate began in 2004, and obviously a lot has changed since then with different loans, different home loans, different grants that the government's put out.
Right, nice. So did you start with Wiseberry Heritage Real Estate?
Yeah, I did. Yeah,
Right.
Back in 2004.
Wow. So on the topic of deposits when you want to buy a home, how much do you have to actually save?
Well, it all depends on who you are, what you've got, and if you bought a property before or haven't. So with a first home buyer, so the government's got a scheme at the moment, which is a first home buyer scheme, where they only have to have a 5% deposit, which is really, really good. And for the single parents out there, they only have to have a 2% deposit.
Right.
So there's only limited spots that the government is handing out. And there's all different fees and charges that come with that they actually get on top of that. So if they're a first home buyer and the government is also giving them free lender's mortgage insurance, which is a massive saving with buying their first home. So it does come off a fair bit. Yep. And the same with the single parents as well. Right.
So what are the deposits used for?
So the deposits are used to come off the purchase price. So right. if they have to pay a 5% deposit and they're buying a home of $500,000, they've only got to have a $25,000 deposit saved to be able to go to the bank and say this. And of course, your affordability has to come into consideration to be able to pay back that loan.
Yep.
But they only have to have a 5% deposit, which is $25,000 instead of having $50,000.
Right.
So it's a massive saving, plus the lender's mortgage insurance, which could cost them up to, $10,000, $15,000, $20,000 as well.
Right. So when you've got your deposit for a home and you've just been approved for a bank loan, that's not all of the fees you have to pay. There are some other fees you have to...
There is some extra fees that you got to pay on top of that. So you do get, with a first home buyer, you also get your free stamp duty as well.
Mm-hmm.
So stamp duty is based on a percentage and you're only granted up to $650,000.
Yep.
Over $650,000 to $800,000, you do pay a percentage of the stamp duty if you do go and pay over $650,000.
Yep.
And you've also got your solicitors or conveyancers fees that you do have to pay. And of course, you've got your pest and builder reports that you do also go and pay, which could cost you up to between $550 and $750 for your pest and buildings. And your solicitors and conveyancers fees are normally between your $1,650 and your $2,000, all depending on who you go with and what services that they offer.
Right. So do you have to save up all those fees yourself, or does that stuff get included in your home loan when you get that?
Or depending on the banks.
Right.
Some of them will include it.
Yep.
But most of the time with your pest and building, you've got to pay that up front before your loan's approved.
Yep.
And your solicitor's fees, sometimes they will tack them onto the loan, but most of the time, because you are actually getting the 5%, they'll ask you for that to be up front.
So when we're talking about stamp duty, what is the purpose of stamp duty? Why do we pay that?
Yep, stamp duty is a New South Wales state budget, which is they put back into the economy and use for funding for public sectors like the health, the emergency services, roads and transport, education and training. So that money that goes back in from the stamp duties is to help those that help everybody else.
Right. So it's utilised back in the community.
Yeah.
Nice.
Yeah.
When are all of these different fees due?
Okay, so most of the time the fees and everything are due on settlement, so once the day that you move into the property, unless you have an extended settlement. If an extended settlement is longer than 3 months, then they ask you to pay the stamp duty prior to settlement time. So if you've got a 6 months or 12-month delayed settlement, you do have to pay the stamp duty within 3 months.
Right, okay. Okay, so talking about now we're talking about mortgages and home loans. Are there different kinds of home loans that you can get?
Absolutely. If you're going straight through to the banks, obviously they just have their options. But if you go to a broker, obviously there's all different options for the different circumstances. Now, I'm not a financial advisor, but just with previous experiences and buying and selling myself, there is different avenues that you can go down in different banks and different options that you do have to suit your circumstances.
Right. So when you're looking at that, is that kind of given? Are you given a choice of all the your different options?
Yeah, so if you go to a broker,
Yep.
Obviously you have all different options to go, and sometimes they sit down and work out what's best for you and the money and the deposits that you've got and your financial circumstances as well. So some brokers or banks will take into consideration if you're a single parent, the stuff that you get through from them. Some banks won't. So they do give you all different options, and they work out what's best for you,
right?
And your current circumstances,
right? So two of the different home loans I've heard spoken about are fixed interest and variable interest. Could you give us a bit of a breakdown as to what those two are?
Yeah. So the difference of fixed interest rates and variable interest rates. If you go for a fixed term, that means that you're locked in at that interest rate for a certain period of time, whether or not the interest rates go up or the interest rates come backwards.
Right.
And it does get a little bit more expensive, and you got to look at your circumstances as well, because if you are going to go and sell within a fixed rate period, there is fees and charges that the banks will charge you if you are going to go and sell within that time that you're locked in.
Right.
Where variable, it's a variable rate, so it'll fluctuate and go up and go down with the interest rates with the Reserve Bank. If they decide to go and put it up or pull it down, that's where your rates fluctuate with that. And there's obviously less charges if you do decide to go and sell or change or refinance within that time frame.
I've also heard the term an interest-only loan. Can you sort of define what that is?
Yeah, an interest-only loan is a loan that you actually don't pay back.
Right.
So if for a reason that you go and get an only loan of $500,000, you actually only pay back the interest partial of that. So you'll never own that property. And most people that go and do an interest only loan rely on the capital growth of properties to be able to then pull the equity out and things like that. It's more for investment point of view that people go interest only, because they're relying on long term, not actually short term.
Right. So if people are looking to buy a home, renovate it, and then sell it down the track, or pretty soon down the track, that's when they'd look at like an interest only.
Yeah, or someone that is looking at buying a block and building. You pay an interest only until you move into it. And that's another different loan in itself, a construction loan. But if you're going to do that and relying on the market, but it's more for investment point of view, or someone that's trying to try and flip, that they want to try and flip it, and which the banks at the moment are pretty strict on the interest only. They have done for the last probably 12 months to 18 months. Right.
So are there different loans that are more suited to people, or is it kind of a case-by-case basis thing?
It is a case-by-case basis. There's all different loans for different people and different circumstances. So people that have their own business have to go and get a different loan, and it's offset from that. So it's not a one-shot pony. It is all different for every person. I don't think one person would have, even if you go and get a home loan now today, and then in 12 months time, it won't necessarily be the same home loan that you go and pick. So it's all is changeable.
Right. What's one piece of advice that you would give to someone who is about to lock into a home loan or about to go through this process of buying their first home?
Yeah, absolutely. So there's a couple of things that I do personally. Now, I'm not a financial advisor. I've always, over the years, that when I go and have a look to get a loan or get another property or refinance, I look at the interest rates, and I always gauge on whether or not I can afford it between 5 and 7%. Right. Because that's where the interest rates over the past 18 years of me doing real estate have always sat between. So I want to make sure that I can afford those repayments. And you can go onto the banks now on the little apps and work out, and go and put the percentage in and go and put the price in, and then work out how much the repayments are going to be. And if you feel comfortable with that, then go and do it. But another thing that I actually do over every end of financial year, I do a health check. And it's not a health check on my body, it's a health check on my finances. I go back to the banks, or I go and speak to people and they're saying, I get this interest rate with this bank. So then I go back and renegotiate with my bank. Never be afraid to go back and talk to them about it.
Yep.
Because they earn billions and billions and billions of dollars. So they're going to give it.
Yep.
Or you go and change.
Yep.
And if you're not in that fixed term, you can go and change because
Yep.
it's not going to cost you.
Yep.
And there's a lot of banks that will also go in and go, okay, well, I'll give you this to come over to us.
Yep.
So always go and do a health check every financial year.
Right. Awesome. Thank you for joining us on this. It's been really, really insightful. So what's the best way that people can get in contact with you?
Yeah, give me a buzz, 0403 940 309.
Awesome. Thanks, Kim.
That's okay.